Hello and welcome everyone. My name is Yasser Gulfraz and I'm your tutor for today's session, which is assurance. Today we are discussing assurance engagement, specifically focusing on important aspects, gathering evidence and ensure that information in a report, a financial statement is reliable and accurate. So if anyone is there, can you see my screen and can you hear my voice? Anyone is there? Okay, so let's get started. So today session is learning outcome 3, understand how to gather evidence when completing an assurance engagement. As I said, today we will discuss assurance engagement, specifically focusing on important aspect gathering evidence. So information in a report or financial statement is a reliable and accurate. So that's exactly what assurance engagement are all about. So audit assurance, what is audit assurance? If anyone is there, can you tell me? Okay, so audit, well, think of it as a way to make sure that the information in financial statement is reliable. Uh, we need and why we need assurance? We need it because companies share their financial details with the public and we all want to trust that information. Audit assurance help us build that trust by checking if everything is accurate and in order. So what does the assurance here's where auditor come into play. Auditors are like financial detectives. They examine all the financial record to make sure everything adds up, just like when child count their toys to make sure none are missing. Auditors count to company financial details to ensure nothing is overlooked. So auditors use a set of rules and guidelines, kind of like a checklist, to make sure everything in order. So this ensures consistency and fairness in the audit process as well. So here is a self-assessment. You can check your knowledge 1 to 10. So 1 means not confident at all about the topic, and 10 is as confident as possible. So assurance process and techniques, assurance planning, assurance evidence, assurance procedures, sampling and testing, computer assisted assurance techniques, assurance process for non-profit organizations, different stages of requirement, including planning, collecting appropriate evidence for the completion of an assurance engagement, then review and reporting, qualification of reports, impact of legal requirement. So assessment criteria, when then further discuss the reason of preparing documents relating to assurance engagement, describe different stages required to gather evidence, review different methods of obtaining evidence, discuss issues arising from the gathering of assurance evidence that needs referral to senior colleagues. Then SM1 and 2 analyze the need of written confirmation of representation from management as a form of assurance evidence, then compare and contrast the reliability of different types of assurance evidence. So assurance engagement, in which a practitioner accountant express a conclusion designed to enhance the degree of confidence of the intended users other than the responsible party about the outcome of the evaluations or measurement of a subject matter against criteria. So here we will talk about something called an assurance engagement, understanding the terms. So imagine you have a, that like a practitioner auditor whose job is like a detective. So they look at something important like financial statement. You can think of these as money reports to make sure everything okay. So who are the people involved? There are the intended users. These are like the owners, stakeholders. There are the ones who want to know if everything is going well. Then there is the responsible party. There are like the managers or directors. They are the ones in charge of the money stuff. So then levels of insurance, two type of assurance, reasonable and limited. So reasonable assurance is a high level of assurance, but not absolute. Hello.
Hello.
Hi there. Any who's
Hi.
there?
This is Johnson.
Hi Johnson, how are you? You okay?
Yeah, I'm okay. Sorry,
Yeah.
I joined earlier on the link of it tomorrow. Just connected to the link of today now.
Oh, okay, okay.
Hmm.
So uh so just little bit introduce yourself. Are you uh accountant or just
I'm
studying?
accountant. No,
Okay,
I'm an
good.
accountant. Yeah.
Oh, okay, so you are based in UK?
No, no, no. I'm based in Nigeria.
Oh, okay, okay. So how's everything? Everything is fine?
Yeah, everything is fine.
Okay, okay.
Just
So I'll
just
just,
want to get just want to get through this.
sorry.
As I just want to get through this.
Oh, yeah, 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 that's fine. I just started in a while, that just 5 minutes back. So
Okay.
we will just, I think so. You were here last week as well, on you. You came for a while.
Yeah, I got connected, but I had network issues. I had network issues, and I requested if the videos could be shared so that I can. I was connected, but I couldn't follow. So I think
Oh,
the first two lessons I missed them. So if you can share the videos, the recordings, I think that would be useful.
okay, okay, no problem. Yeah. Okay, so
Mm.
reasonable insurance, there are two type of assurance, reasonable and limited assurance. So reasonable is like saying pretty sure everything is good, but I can't be 100% certain. High assurance, but not absolute. Okay. So limited is a lower level of assurance than reasonable assurance, which is stated negatively. So limited is a bit lower, like saying I think things are okay, but I can't say for sure. So why assurance is a perfect? Uh, there's a thing, auditors or these checks have some limits. Directors or the managers sometimes makes decisions that are a bit like secrets. They might not tell everyone to the auditors. So also there's a chance that some tricky things like fraud, which is not playing fair with money, might be hidden. The auditors also don't check every single things because that would uh, take forever. So they check a few things like sampling in a taste test and hope it represents everything. So in the end, even though the auditors tries the best, they can't be 100% sure everything is perfect. It's like saying pretty confident, but there is always a small chance something is, hiding from them. Okay, Johnson.
Yeah,
So
Yeah, I'm okay.
yeah, yeah. Audit a type of assurance. I'm just trying to explain in my own words as well. So I'm not going just reading and then try to explain in my own words. So if there is any question or anything comes in your mind, just ask, okay? But hopefully
Okay.
you know everything because you're a practice accountant. Are you already a ACCA or any qualification, or you just getting license for a IFA?
No, no, this is my first licensing.
Oh, okay, for joining for licensing, that's good.
Mm.
So previously you don't have any Nigerian or any other license?
No.
Okay, that's good. So here a type of assurance engagement that is carried out by an auditor to give an independent opinion on a set of financial statement requirements, exemptions, reports. So here let's talk about a law called the Companies Act 2006. The law is like a set of rules for companies. Important role is that it has it that all companies must have an audit. We know that the word exemptions might sound a bit complicated, but it means some companies don't have to do an audit. Small companies, which are those with a turnover, that is the money that make less than 10.2 million assets, that what they own less than 5.1 millions, and fewer than 15 players can skip the audit. Then dormant companies, which are like sleeping companies that are not active, also have to get an audit. However, it is a company listed on the stock exchange, a bank, or an insurance company. They can't escape the audit even if they are dormant. So auditors are like checkup for companies to make sure they are doing things right. And the Companies Act 2006 is the rule book they have to follow. Small companies and dormant companies get a bit of a break, but the auditor's job is to tell the shareholders if everything is in order. So I think so there will be a different than Companies Act 2006 in Nigeria. So discuss the reason of preparing documentations relating to assurance engagement, purpose of assurance. So accountability covers a range of issues discussed under title A Corporate Governance. There are, here we create documentations for assurance engagement. Accountability, when we say accountability, means being responsible for certain things. In the world of business, this cover a bunch of different issues. We often discuss these under the big title of corporate governance. It's like the rules and practices that companies follow to make sure everything is fair and right. So then, that financial statement, profit warnings, going concern, disclosure communications, then director accountability, then investment protections, internal control, and risk policies. So internal control and risk policies, companies have rules and plans to control how they work and deal with risks. Assurance documents checks if these rules are effective, like making sure the rules of games are fair for everyone. Assurance provision, communication needed, and assurance engagement. So assurance is all about making sure things are transparent and accurate. So especially when it comes to financial matters, communication is key. So when we talk about assurance provision, it involves communications director. The people in charge have a responsibility. They need to produce financial statements. These statements should not just be any statements. They should give a true and fair view of what's going on. So directors' responsibility are not just crunching numbers for themselves. They are encouraged to communicate with shareholders. So shareholders are like the co-owners of a company, so they have the right to know what's happening. So that it means being honest and showing things as they really are. Imagine it's like telling your accountant exactly how you spend your financial money, business money. No hiding, no exaggeration. So also management of risk it's a last part of assurance provision involves managing risks. Think of like making sure the company is prepared for anything unexpected, is like having a backup plan is in case things don't go exactly as planned. So as assurance engagement professionals, assurance engagement professionals opinion. So this is where a professional accountant comes into play. So the professional accountant comes into play. So they are like financial detectives, evaluating and measuring different things to make sure everything is in order. Professional accountant looks at the subject matter. Subject matter is like the main focus, the things we want to be sure about. It could be financial statement, how much money is in the bank, or other important aspects. So using criteria to do this, they use suitable criteria. Criteria like rules or guidelines. They help the accountants measure things properly. It's like having a checklist to make sure everything is as it should be. So assurance engagement involves professionals who act like financial, detectives, checking everything and giving their opinion to make sure we can trust the information. It's like having a reliable guide in the, sometimes complex uh, financial issues. Nature of assurance services, statutory, non-statutory auditors, advantages of non-statutory auditors. So assurance services are like the, they help. Yes, Johnson?
Just to check, when you say professional accountant, does that include the auditors, the external auditors, or you're talking of internal, engaging internal professional accountants?
Yeah, it depends, that some companies use external auditors as well, but normally it done by external auditors as well. So company, before going to external auditors, they can use their own internal auditors as well.
Okay.
Okay. So like if you have a company, if you will hire an accountant from outside, let's say if you talk to me for your audit or your assurance or your anything, obviously you will check by yourself as well before coming to me. Okay.
Yeah, that's
So if
correct.
you have a big company, companies have their own CAs or accountant as well, so they can check by themselves as well. But normally insurance or audit is external auditors. They comes from outside. It's like in England, it's a requirement like, auditors do, external auditors, do this kind of stuff. Okay.
Yeah, that's correct.
So assurance services, they help ensure that everything is in order and the financial information is reliable. So there are two types of auditors, statutory and non-statutory audits. So statutory and non-statutory auditors, imagine a statutory auditor as something required by law, specifically the Company Act 2006. It's like a rule that companies need to follow to make sure their financial statements are accurate. On the other hand, non-statutory audit is like a friendly checkup. It is not required by law, but companies can choose to do is for extra assurance. So here is your answer as well. Okay, Johnson. Okay. Hello.
Yeah, I'm
Yeah.
following.
Yeah, you know that there are two kind of auditors. So statutory auditor is required by law, so done by external auditors. Okay.
That's correct.
So non-statutory auditors you can done by your own auditors or accountants. So second is a purpose of audit. The main reason we do audit to give an opinion on financial statements and check our, the government check financial record. Think of it's all like this. If you have a, uh, uh, like let's say a friend who tells you a story, you might want to check with someone else to make sure the story is accurate. So similarly, audit help companies make sure their financial that stories are correct. Advantages of non-statutory auditors. When we talk about why a company might choose to have a non-statutory auditor is like having a, the bonus checkup. One advantage is when business want to settle their account in a partnership, it's like making sure everyone the partnership agrees on the numbers. Other example of non-statutory auditors, when you, let's imagine you want to sell your business, having a non-statutory auditor can make your business more attractive to buyer because they can trust the financial information. So if you need talk to the bank about getting a loan, a non-statutory auditor can be like a good reference. It shows the bank that your finance are in a good shape. uh, Assurance services and audits are like, that is a main punch of your businesses. That help businesses stay in good financial health. Statutory auditors are like mandatory checkup, and non-statutory auditors are like the extra that vitamins that can make business even stronger. Now describe the different stages required, gather evidence when completing an insurance engagement reviews, why the reviews done, and internal audit, why it done. So audit reviews, why do we do them? When we talk about auditing reviews, we are aiming for a high level of assurance. This means we want to be very sure that the financial information is correct. So during a review, we look at the big picture. We don't go into much details, but we pay close attention to anything that might catch our eyes. The goal is to spot anything important that could affect the overall accuracy of the financial statements. Then we talk about internal audits. What is their purpose? Internal audits are a bit different. Let's imagine you are a part of team that works within a company. So this team is like the internal police, but a friendly one. So they are there to help the companies run smoothly. These internal auditors are employed by the organization itself. So their job is to check that everything is inside the company is in order. So they focus on the rules and guidelines set by the management. Basically, they help the bosses manage things better. Truth and fairness. Obviously, auditor give opinion on truth and fairness, factual, free from bias, reflect commercial substance of transactions, are not opinion of absolute correctness, obtain evidence on test basis only, and cannot give absolute assurance due to inherent limitations of audits. So basically, they focus on the rules and guidelines set by the management, kind of like the company's rule books. So their main goal is to help the bosses manage things better by making sure everything is following the rule. It's a bit like having a team of people inside the company, making sure everything runs smoothly. So internal auditors are like the company own special way of checking that everything is in tip top that shape. Okay, here is assurance and reports, limitation of audits. Limitation of audits, like audit is not objective, judgment have to be made. Not all items the FS are rested, and then limitation is accountant and control systems. Audit reports has inherent limitations. Audit report is assurance a long time after the balance sheet due. So audit evidence sometimes indicates what is probable, not certain. So not all items in the financial statement are tested. So here, basically, auditors does not check everything single thing. It gives them an idea, but they can't be 100% sure because there are limits to what they can do. In conclusion, auditors play an important role in making sure financial reports are like honest and fair game. So they give their opinion, but remember, one thing, it's not guarantee of absolute correctness. It is the best they can do with the tools they have.
Hello, just a question.
Yes.
When you say auditing is not objective, when you say auditing is not objective, but I know that auditors come in to give assurance of the books, to report, to express an opinion. But when we say it's not objective, uh, then what are they doing really?
No, that's a mean that they are not 100% sure. Objective mean their judgment have to be made. Okay. I mean that they can, objective mean is just, he used the word that uh, auditors make sure the information is factual, meaning it's based on real thing, not made up.
Mm-hmm.
So, and just like it's just like that they want to make sure that the information is not favoring one side more than the other. So it's not 100%. It's not like you are not sure. Objective mean is sometime you can 100% sure that this is our objective, but it's not judgment have to be made. Okay, not objective. You can. It's always there is a something, like you can say fluctuations. You understand?
Okay, because what I know with audit is okay, fine. They don't do 100% test, but they do sampling, right? They do sampling,
Yeah, they
uh,
do.
which every transaction in the pool has the same opportunity to be selected. So from that sampling represent the whole. Then they do a testing on that, and
Yeah, it's like a probability, as I said.
yeah, mhm. Okay.
Yeah, it's like a probability. It's not,
Mm.
that they don't check everything.
Mhm.
This is what you mean then, isn't it? They have
Yeah.
sampling and testing is a probability.
Mhm.
Is not, they can't check everything. They don't check every single objective means that their objective is not to checking every single. They just can make your, like, let's say you have a 100 transactions. Okay.
Mhm.
Let's say
So
your auditor,
yeah,
sorry.
yeah. I think the statement I'm not agreeing with is that auditing is not objective. I think that's a statement that I'm not agreeing with. That's a statement.
Yeah, you have your point of view that this is what IFS says, that
Mhm.
this is by, that, or
Okay.
IFA says that. But end of the day, is audit is like a probability, is not, they don't check every single piece of your, that
Okay.
financial record.
Okay. Sorry, maybe for better understanding. So these are the rules of IFRS. This all this assurance report and limitations of audit. This is coming from IFRS.
Sorry, I just
Is this coming
disconnect.
from IFRS? These limitations of audit.
Yeah.
Okay.
International financial report.
Yeah.
Yeah.
Yeah. Okay. So if they're coming from them, then we just need to queue by it.
Uh, Basically the, that if I come to, if I talk about objective, or if I talk about assurance or audit, the only objective of auditing is to find reliability of financial position and profit and loss statement. What do you
Yeah.
say? you
Hmm.
know so to reliability and to check everything, I think so they use probability kind of stuffs. They check
That's
certain transactions and certain stuffs according to, as you said, IFRS rules. That's
that's
it.
correct. That's
You
totally
know,
correct.
that's I completely agree with you. They use
Hmm.
IFRS rules. There is one objective, which is reliability and accuracy of financial record and financial statements and profit and everything. Okay, and
Hmm.
they do, and they audit, they assurance, or they do everything according to IFRS. Okay,
Yeah.
so
Hmm.
they use IFRS rules, but they don't check every single bit. Let's say you are auditor, and going somewhere else. So there obviously, if it's a big company, there will be a thousands, transactions and things to check. But obviously you will choose a specific, or which you will think that more important to check, like use probability, so like a sampling and testing. Okay. So, but
That's correct.
sorry.
I said that's correct.
Yeah, so I'm completely agree with you that I think so, Johnson, these bodies have their own, opinion as well. They might be saying right things, but in other way that is not objective. But the main objective is one, the accuracy and reliability of transactions, according to IFRS rules. Okay.
Which I agree with you.
So let's move on. That's clear now. Shall we move on now?
Very, very clear.
Yeah, okay. Assurance and reports, materiality, levels of assurance. So here, basically discussing important aspect of financial statement, assurance and reports, materiality. So, here we will talk about something called materiality. Materiality is about figuring out what's really important in financial statement. So imagine you are looking at the whole picture of the financial statement and you want to know what information is vital. So we use the term material when something left out or said incorrectly could affect the decisions of the people using these statements. So it is not something we can precisely measure which numbers. Instead, we consider both the quantity of information and its overall importance. So in other hand, when we talk about level of assurance, we have different levels depending on the kind of work we are doing. Audit, reasonable assurance. Think of an audit like a throughout investigation. When we conduct an audit, we are going reasonable assurance that the financial statements are reliable. It's like saying we have looked into this thoroughly and everything seems in order. So review negative assurance, negative assurance is a less intense. It's like checking things over to make sure nothing stands out as wrong. We provide negative assurance here, which means we did not find anything that seems off. Agreed upon procedures, non-assurance are made specific. So here we are not giving any overall assurance. Instead, we are just following certain procedures that we are agreed upon. So without making a judgment on the overall accuracy of the financial statements. So assurance, one more is completion report, no assurance. So a completion report is like putting together information. We are not providing any assurance here. We are just organizing the data in proper manners. So assurance and reports are about making sure financial statements are reliable. We consider what important like materiality and the level of confidence we can give, which is also level of assurance based on the type of work we are doing. Okay, so hope many things are clear over here as well.
Yeah.
I am always have Johnson, I have my own opinion as well about assurance. I think so that audit is enough. Sometimes we are expanding things, is my opinion. Don't you think sometimes that they expanded things for no reasons? Okay. I mean that one thing is enough, which is external auditor, and internal things can be managed by your own accountants.
That's correct.
Okay, so sometime, like let's say that if you look at UK ACCA or SEMA, there are plenty of subjects like SEMA. We study about 14, 15 topics. ACCA we always, again, we study about for 15, 16
14.
subjects.
I think there are 14 as well.
Yeah,
Uh,
14 or
yeah.
subjects. So when you,
IFA, IFA too, there are 14. Everybody's 14, 14.
yeah, 14 subjects. But if you look at American system, if in American system, there are not, like CMA is or CPA,
Mhm.
public accountant, or there are main only 4 or 5 topics. Okay.
Yeah.
So they touch everything, but in percentage, in not in very, that detail, or not like a CMA, you can finish within a year. Okay, there are 2 papers, I think so, 2 or 3, yeah, 2 or 3 papers.
Mhm.
So same
Then
CPA.
then
Okay,
CPA Australia too. I think there are 5 papers too. I think 5
yeah,
or I think
yeah,
6 or yeah,
yeah.
between 4 and 6. Yeah.
So Johnson, even some countries like look at India, or if we talk about UAE or Pakistan or other countries, they expanded more, that for no, like about 18 or 19, or if you look at Indian CA, they study about 20 plus subjects. Okay.
Yeah.
So some subjects are, trust me, when you will look at them, you will say that, oh, they are completely unrelated. There's no point to, you tell me that HRM, human resource management, okay,
Mhm.
business
Yeah.
management, okay,
Mhm.
quality assurance. These are not related to, I believe that these subjects are not related to, accountants.
Mhm. Yeah, I
Accountants,
agree.
accountant means purely accounting,
Yeah,
purely,
but yeah,
yeah,
but I think what they do, they want the accountant to be a more robust profession. I remember in many years ago in many territories, an accountant would dabble into tax. So accountant can become a tax advisor. Accountant can become a company secretary. Maybe that's why they did that to make the
yeah,
accounting profession
yeah.
very robust. Yeah.
You are right, but here
Mm.
when we talk about EU, US, or that UK, if you
Mhm.
accountant can be, definitely accountant can be company secretary, but accountant can't be financial advisor. Okay, they have
Mhm.
they have their own domains, like to be a financial advisor, you have to pass the financial advisor exams, like a Chartered Institute of Securities and Investment, or Institute of
Mhm. Mhm.
Financial Advisors, that.
Yeah.
So I think so,
Yeah.
yeah, you are right in a way that some countries, everything comes together in a one, certifications. Okay,
Mhm.
but like US, they are completely, I'm really, I'm still trying to complete my CMA, sir, management accountant USA. Okay,
Yeah. Yeah.
so
Okay.
it's a really interesting, trust me, if you go through, their certification, it's a really interesting,
Mhm.
management accountants.
Yeah.
There are only 2 stages, level 1 and 2, but they, that they touch everything in percentage.
Mhm.
Like in level
Yeah.
1, you can 20% accounting, 20% financial accounting, 20% management. Things comes works like that. So
Yeah.
anyway, so, but IFA, that they really, really work hard, IFA. If I talk about Institute of Financial Accountant, they really, did work hard. So if you look at
Which one is that? Which one is that?
IFA, one is yours, the studying IFA.
Yeah. Yeah. You said they are what?
They really work hard, they really improve themselves, they are
Yeah.
very now they are very I mean that widely respected and acceptable qualifications now, and they are member
Mhm.
of IFAC, International Federation of Accountants. So
Yeah.
same as
And they have
accountant.
they have this partnership with Australia IPA.
Yeah, IP, and they are, that one another thing I just tell you, they are trying to get chartered status as well. They're working on it.
Okay.
Yeah, previously they were member, IFAC members, but they were associate member, not full member. Now they are full members. So they have
Mhm.
changed their whole qualification system and everything, and now they're working towards. I've spoken to one of their, uh, director. So they
Mhm.
are working towards, chartered status as well. So
Yeah.
hopefully, I believe that personally, next. few years, might be couple of years or 3-4 years, they will get a chartered status as well.
Okay, so if they have the charter status, those who have qualified, maybe they'll do some 1 or 2 things to
Yeah,
become.
obviously, to qualify, you have to do some extra bits, you know that. So,
Yeah.
like if you complete before that, so to get a chartered status, you might do some extra top-up stuff like some extra subjects or some exams.
Mm-hmm.
But they are really good for small businesses, and you know that mostly accountants who are doing private practices, they work for small businesses as well,
Yeah, yeah. But apart
small
from
and
that, in some
medium.
countries,
Yeah, yeah.
in some countries, the chartered accounting bodies accept them directly like that.
Yeah,
They accept them as equivalent.
yeah. I know many chartered accountants, trust me, you know that I know many people who are ACCA qualified, but
Mm-hmm.
they are doing IFA or they are getting AAT certification just to do, practice for small businesses.
Mm-hmm. Mm-hmm.
Even they know everything. I'm not saying, but IFA touches many, that basic things, which
Yeah.
are related to small businesses. Obviously, I hope you have passed some other subjects like a financial accountants or accounting or,
Yeah, yeah,
uh,
yeah. I
you
have,
know,
I have ACCA, though I've not finished.
okay. But
Mm-hmm.
but
I
if
have
you look at
ACCA.
IFA, you will see that they are specifically working for, the small businesses.
Yeah.
Okay, anyway, responding of risk. Yeah. So reporting to risk audit evidence, this is where, we share our findings with others. We use simple language to tell a, clear story about what we found during our audit journey. So in the world of auditing, we start with a plan, audit acceptance, follow the rules, internal controls, check the financial statements of financial positions, put the puzzle pieces together. So audit completion, then share our findings in a simple story reporting. So it's a bit like solving a mystery. So making sure everything is in its right place. So test of controls. So we have test of controls are like safety measures a company has to make sure everything is in order. So imagine checking if all the doors and windows are locked before going to bed. So auditors do similar checks to see, if the company's internal controls are working well. So
Mm-hmm.
substantive procedures, when we talk about substantive procedures, uh, these are like the main, investigations. It is when the people really gets into the detail. Auditors check the numbers and documents to make sure they are accurate and complete. Here, that was the. So analytical procedures, and analytical procedures are like using a magnifying glass to look at the big picture. So we compare different numbers and see if that makes sense together. It is a bit like putting together a puzzle to make sure all the pieces fit. So then audit evidence, here we are in auditing risk and audit evidence, particularly focusing on tests of control. Understanding the basic in auditing, we want to make sure everything is in order, especially when it comes to preventing or detecting mistakes. There are two key things we need to know about. First is, design of systems. We want to be sure that systems are set up properly to catch any errors. And then operation of system, we need to check if these systems have been working the way they should during the time we are looking at. Here, some review different methods of obtaining evidence of assurance engagements. So, not this one. Here, yeah. So sampling is key aspects as uh, of obtaining sufficient appropriate audit evidence. A sample must be chosen which enables the auditors to get the evidence required. So why do we use sampling? We look at a smaller group or sample to make sure everything is okay. So there are two types of sampling we use: statistical and non-statistical. Oh, it is gone. Here. So statisticals and statistical sampling. Sampling is like randomly picking, things from the, let's say picking candies from bags without looking. So non-statistical sampling is when we use our professional judgment to choose, things we think might be interesting. Both ways help us get the right information. So tolerable misstatement, yeah, it is like the the maximum amount of mistakes we can accept. uh, if the things are a bit different, that's okay, but if things really bad, we need to do something. So a tolerable misstatement helps us figure out how much difference is okay. So as auditor, we apply our procedures to less than 100% of the things we are checking. That's because looking at everything is like uh, everything is like let's say bag of candy, eating the whole bag of candy. So it is much too much. We want to be sufficient and effective in our work. We have statistical sampling where we randomly choose, and non-statistical sampling where we use our judgments. So, tolerable misstatement help us decide how much difference is okay. And remember, we don't need to check every single thing. As we said earlier, we just need to be smart about how we pick our samples.
Hello, I lost you for a while.
Yeah, sorry.
Hmm.
Yes, I was talking about sampling, Johnson.
That's correct.
Okay. So now here, if you come to the, it is CATS. If you come to the page 23, so it is now common for both business and auditors to use computer. IT brings many advantages to audit. CATs, or computer assessment audit techniques, these are like uh, superpower tools that auditors use to make their jobs easier and more accurate. So, what is CAT? We mean computer assisted audit techniques. These are basically tests that auditors do, but with the help of computers. Because computers can do some tasks better and faster than human, making the audit process more detailed and the rules more reliable. So there are two kind of, that audit software and test data. Uh, Audit software, this is like a special program that helps auditor do their checks using a computer. It's like having a digital helper. With audit software, we can do things like look at data, compare different version of programs, version of program, and do other tasks that would take a lot of time if done by hand. So test data, imagine if you want to check if a system is working properly. Test data is like giving the system some practice questions to see how it responds. This helps auditors see if everything is running smoothly the data can be either right or wrong depending on what the auditor is trying to find out.
Yeah.
Audit evidence. So here we discuss about aspects of auditing, some other important, sometime called audit evidence. So our mystery is to express an opinion on whether things are true and fair in a company's financial records. To do that, we need something called sufficient and appropriate audit evidence. So what is the evidence? Obviously, it is basically information we collect, draw, and conclusion. We have two type of methods to gather this evidence, test of control and substantive procedures. Test of control are like checking the system. A company has to make sure everything is running smoothly. So think of it as making sure all the locks on the doors are working. So we want to be sure that the company has good internal controls. Other hand, substantive procedures are like, digging into detail. We look at different classes of transactions, and accounts, saying different types of business activities and accounts balances. So we also use something called substantive analytical procedure. So this means we are using our brains to analyze the numbers and see if they make sense. So to sum it up, audit evidence is like the information we collect to solve the mystery of a company's financial record. We have two ways of doing: checking the overall system, test of control, and getting into the uh, nitty-gritty details, substantive procedure. Financial statement assertions, financial statement assertions are representations made by directors. So we are essentially looking at the promises or statements that company directors make when they giving their stamp of approval to the financial statements. The first set deals with transactions and even during the period under an audit. So imagine this as a timeline of everything that happened. So occurrence, uh, first up, we want to ensure that the transactions and event recorded actually uh, occurred. It's likely checking that the things we say happened really did happen. Uh, completeness, when we talk about completeness, we want to make sure that we haven't missed anything. We are looking at the financial statement and saying, did we include all the important stuff? Accuracy is obviously important. It is about making sure that the information we have put down is correct. So we are essentially double check our mathematical calculations. So then cutoff or measurements, one is all about timing. We want to ensure that the transactions are recorded in the right period, no jumping ahead or lagging behind. Classifications, we want to make sure each time is in its proper place in the financial statements. So then moving on, next, account balance at the priced and existence, right and obligations, completeness, valuations and allocations. Then when we come to the presentation and disclosure, okay, so rights and obligation, occurrence, completeness, classifications, and understandability, accuracy, and valuations. So again, accuracy and valuations, we are circling back to accuracy and valuations to make sure that even in presentation, the information is correct and appropriately valued. Audit evidence, as auditor, we use a combination of traditional audit procedures, computer assisted techniques, and careful analysis to gather the evidence needed for a thorough examination. So this ensures the reliability and accuracy financial information, which is important for making informed business decisions. Introduction to audit sampling. So as you know that we discussed previously, auditing is all about checking things to make sure they are correct, and sampling is one way we do this, without checking every single things. In auditing, we don't check every single thing. Instead, we check smaller group to make sure everything is in orders. So there are different ways we can choose which things to check. We can use statistics or pick items randomly, like drawing names from a hat, or we might pick things on purpose. So like checking all the cookies with chocolate chips because they are important. This helps you gather enough good information without taking forever. One thing is here is talking about sample size. Sample size in auditing, we consider how much risk we are willing to take, like the risk of missing a problem, of thinking there is a problem when there isn't. We want our sample size to be just right for the jobs. There are two main things we are looking at when we do the tests of control and substantive procedures. Test of controls are like making sure our process are working. uh, Substantive procedures are more about checking the act and stuff. So finally, last one is steps in sampling. We need to know what we are looking for and where to find it. So that's setting out objectives and identifying our populations. Then we decide how many things to check, our sample size. After that, we pick our items to check, and it's time to analyze the results results. Uh, Again, audit documents, working papers, important to document all work performed, enable partner to review, educate work performed. Uh, Provides details of work done for future references, assist in planning and control of future audits, encourages a methodical approach which leads to better quality auditing, ISO 230 audit documents. So in a nutshell, audit documents or working papers are like our study notes for auditings. They help others understand our work, guide future audits, and keep us organized for better, quality auditing. And ISA 230, that's just the rule books we follow to make sure we are doing things right. Then again, sufficient test of control and substantive procedures are types of evidence, reliability of audit evidence, audit testing design to fulfill audit assertions. Less than 100% evidence is usually obtained, and all audit work must be documented. Basically, documentation is an important part of our job. We need to write down everything we do during the audit. This helps us and other understand what we have done, why we have done it, and what we found. So it is like keeping, diarying of our audit journey. Here, that uh, different kind of audit options, evidence, sufficient, relevant, natures, that auditors also use different kind of stuff. Also use here CATs, CATs stand for, again, computer assisted audit techniques. Think of it like using special tool or software to help with the audit process. analyze the need of written confirmation of representation from management as a form of assurance evidence. Why do we need these written statements? Uh, there are two main reasons. First, we want to make sure that the people in charge, that's management, did their job when it comes to making the financial statements. So these statements shows how well a company is doing financially. So we want to confirm that they followed all the rules when preparing these statements. Did they use the right guidelines? Did they give the auditors all the information they need? They needed, did they record all the money stuff correctly? It is like a checklist to make sure everything is in order. So the second reason is to help the auditor. Sometimes the auditor needs a little extra support to make sure everything is accurate. These written statements act like backup evidence, kind of like having a friend vouch for you when you are trying to prove something. So basically, in summary, written representations are like official notes from the management of a company. They confirm that everything was done right in preparing the financial statements, and they can also help the auditor double check their work. It's all about making sure things are fair and uh, fair in the world of auditing. Example includes plans of intentions that may affect the carrying values of assets, confirmation of values where there is a significant degree of estimation of judgment involved, then formal confirmation of the directors, then escape of laws and regulation that may affect the financial statements, including compliance. How are written representations obtains? So when auditors are checking companies' finances, they make a list of things they need to ask the companies about. So the list includes important items that the company needs to confirm or explain. So we call this list management representations. So as the audit continues, the auditors will send a letter to the company. This letter talks about the important things the auditors want the companies to confirm or explain. So the company has to write a formal response to the auditors. The response like letter from the companies to the auditors. So the company needs to sign this letter and send it back to the auditors. Quality and reliability. Uh, Unfortunately, written representation are internal source of evidence. So they are basically statement that a company writes down, especially about its finance. So now the thing is, we need to careful with these written statement because they can be a bit, tricky. So you see, these writing comes from inside the companies, and that means they might not always be completely reliable. Okay, and their quality and their information uh, might not always be completely reliable. So in fact, there's a rule called ISA 580. So that say we should be a little cautious with these written things. They are like puzzle pieces that help us understand the big picture. So, but we shouldn't rely on them alone. We need other evidence like deep check needs more than one clue to solve a case. So uh, basically written representations are like puzzle pieces in our audit investigations. They help, but we can't rely on them completely. We need to check if they agree with other evidence, and we need to be sure that the people behind these writing are trustworthy. It is like being a detective putting together all the clues to solve the mystery of a company's finances. Again, it's the same. Then additional matters requiring written representations. Here, directors are uh, 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 like the guardians of a company. They make sure everything is fair. They keep track of friends and family connected to the company. That don't worry too much about their tiny mistakes, and they consider both recent and possible future events. So it is like they are the uh, there's the main people of the business, or company. So making sure everything runs smoothly. Compare and contrast the reliability of different type of assurance evidence. Example of assurance services: audit of financial statement, review of financial statement, risk assessment report, system reliability, and check slide sampling, CAT audit evidence and financial statement, and use and table to compare the different methods of assurance to complete the tasks. So these reports check the reliability of the tools we use. Imagine it our compass is broken, we might get lost. These reports make sure our tools are working correctly, so our journey is smooth. Yes, Johnson.
So what's the difference between review of financial statement and audit of financial statement?
Sorry, review of financial statement, or
Yeah, if you look at the examples of assurance services, you have audit
okay,
of financial statement
yeah,
and review. What's the difference?
yeah. Audit of financial management. The audit is financial statement is like checking every mark on the map. It is detailed examinations to make sure the numbers are accurate. Think of it's going through each clue to find hidden treasures. Every single bit. So review of the financial, it's look like the my map quickly, not as detailed as an audit, but it gives us a good idea if everything seems all right. Things of its quick check to make sure we are on the right tracks. Like if your employees might be your auditors do in detail check, but you are a director or you are head, you will review before you final sign off your report. Is that clear?
Yeah.
It's a simple thing, that when we do audit, you are a team head of the team, and you will go with your auditors, and they will audit every single bits your team, like 8-9 people, or if it's a very large company, might be auditors go with you, and you are the final person who will sign off. You understand? So before signing, you will check, might be comes in your mind, oh, I'll check quickly, look at financial, not everything, not like a gross account, not like a profit and loss account, not like a other things, but might be comes in your mind, oh, let's quickly check this couple of few things, that this is called review.
Okay.
So like when you go to doctor, that you staff will take your tests, blood test, urine test, different tests, but finally will go to the doctor. So before quickly check, he will might be see a couple of things before signing and before giving you a report or saying, oh yes, you are right, or these things to sort out. You understand that? So that's a quickly review.
Okay, I fully understand.
Yeah. So like if you have a company, you're accountant and you have a company, reviews, your lawyer staff will do everything, but obviously you are the final person who will pass or who will sign off everything. So you might be give a quickly review, check few things which are in your mind, or these things like a financial statement, you quickly check that, oh, balance and assets and liability, both sides are equal. Okay.
Okay.
So yeah, that's the quickly review.
Sorry, how long this class supposed to last for how long?
That's nearly we finished now. We are finishing
Oh,
now.
okay.
Just last it's normally 1 hour, but this lecture was a bit longer. So normally we finish about within 1 hour, but this was
Yeah, I'm just asking so that I can prepare,
yeah, I
plan my
understand.
schedule.
Sorry about that. Just
Plan my
finish.
schedule.
Just for Johnson is a last. That basically in conclusion, the combination of traditional audit methods and modern computer-assisted techniques is essential for conducting a thorough and effective audit. Test of control and substantive procedures ensure that accuracy of financial information. While analytical procedures provide broader perspectives, the integration of computer-assisted audit techniques such as test data, live and dead testing, and audit software enhances the audit process by harnessing the power of technology. So yeah, that's it. There are some references and plenary. Yeah, that's it for today's Johnson. If you have any question or any concerns, issues, please drop me an email at yasir@ukversity.co.uk.
Okay, for sure.
So thank
For
you
sure.
very much. Sorry about that. It was, I know, that bit longer than
No, no,
normal,
it's okay.
but
No, it's okay. I just asked so that I can plan in
yeah,
my
yeah,
schedule.
yeah. So hopefully I'll see you tomorrow at 10 o'clock. So,
Yeah, please help me send the note for last week, the notes and the recordings, since I could not fully attend, that I can catch up.
yeah, I'll speak to her tomorrow, or sorry, Monday, and they will send you everything. Okay, don't
Okay.
worry. So you will get everything by Monday. So
And
thank you very much for joining me
sorry,
today.
just last question. How long do we plan to hold these lectures, these classes?
Tomorrow is last lecture. Okay,
Okay.
and
Okay.
next lecture next Saturday is a assignment discussion.
Okay.
So
Fine.
it's up to
Mm.
you if you want to attend or not, because obviously, if have you made assignments before?
No, 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 I've not. I would likely to attend because I think I was trying to do some assignment. I think how to submit and all that. So next Saturday, I will take during the week to go through whatever we have done. Then we'll look at the assignment next Saturday. I'll really be happy to attend.
Yeah, yeah. Tomorrow is the last lecture, but next one is, assignment discussion.
Okay.
So we will discuss our assignment in our last session, which will be on the Saturday, 2nd of December. So tomorrow is a last session. So
Okay.
have you, how many subjects you are, if you don't mind
Now
that?
I just have this one and financial reporting.
Or you just need to do 2 subjects?
Yes,
Okay, okay. Then you will get a license and you will apply for a certification.
that's correct.
Oh, that's good then. And that means you have done enough already with your ACCA.
Yeah, yeah, I got exempted. I got
Oh, okay.
exempted. I only had the
Oh,
two. Yeah.
oh, yeah, that's very good. That's very good. At
Mm.
least you will get a license and you
Yeah,
can
yeah.
go forward.
Mm.
Is it a similar to Nigerian accountants or bodies, or is it a bit different then?
No, sorry, I didn't get your question.
I mean that it is a similar to obviously there will be a awarding body in Nigeria, like a
Yeah, yeah,
chartered.
yeah, yeah. There are bodies. There are about two.
Okay, okay. Oh,
There are
so
two
you
of them.
done, but you done ACCA before.
Yeah,
Okay, okay, okay. Yeah, definitely. That's good. At least you will get a license and you can carry on and you can expand your practice as well.
that's correct.
Okay. Okay. I think so. You can normally you can't audit, but I think so that there are certain ways to do audit or certain exams with after completing IFA, you can contact with other bodies to, I think so there are ways to get an audit license as well.
Yeah, yeah. There are. For example, there are some territories that accept this directly in their territories without you doing anything. They give you the license.
Yeah, yeah, yeah. Anyway,
Mm.
good luck for you. I'm happy for you,
Thanks.
Johnson. And see you
Thank you.
tomorrow at 10 o'clock. Okay.
For sure. For
Yeah, okay.
sure.
Thanks. Bye.
Thanks.
Bye. Bye.
Bye.